Hello and welcome to firststepsinforex.com. Today is Sunday the 3rd of April 2011 and we're looking at the Euro dollar daily chart. So what's been going on? Well, as you can see on the daily chart, in the last week we had a very positive week, 5 full days of bullish moves, 5 upward days, which is very strong, and so we seem to be sitting on this particular trend line. Maybe just move that slightly over here. We'd bounced off this major support around 1.4000, which is obviously a major round number, and we continued upwards, and now we've closed just below this resistance area, which isn't a round number, so it's probably, pretty weak as a support and resistance area. Let's go to the weekly chart and see what the long term is doing. Well, as you can see, we've had last 10 on 12 weeks, we've been just very bullish upward moves, and we're very close to breaking through the high, probably past the high of the previous few months back in October, November 2010. If that happens, then we should keep going on quite a way into the higher up. Let's just make a move. We have possible targets there. We have a dual Fibonacci retracement. So if you look at this, it's almost a bullish outside bar. It's just below the high of that one, and therefore, to me, the likelihood is we're going to continue. We have momentum here. There's a very strong trend upwards, and if something's got momentum, it's harder to stop. Something major has to stop. At the moment, people are perceiving, despite all the news, and it's quite surprising, there's a lot of news in the paper about Portugal defaulting, problems in Ireland, etc., with more money required for the banks, but even so, the euro has been piling upwards all week, for the last few weeks. So it's likely to break through and continue upwards. It's all about momentum. Back down to the daily chart. As you see, we're just closing at the 1.42305, and it won't take long to shove that one upwards. So if we break above, let's say if we break above 1.2425, or maybe even up here, you could wait until we've got broken through the high of that a few months back. So if we go above a 1.281, 282, plus say another 10 pips, let's say 1.283, then we should go long, if you're not long already. Okay, for us to reverse on a daily chart and go short, we really have to wait until we've broken back down below. We need at least one negative sort of Japanese candlestick to show. At the moment we've got 5 bullish ones, so it's more likely to carry on upwards, but let's wait and see. Don't make any moves until the UK Europe open tomorrow, and then check to see what's available. Let's zoom in a bit. Let's have a look. The low was 14603. We did drop quite a lot on Friday and then bounce back up again, which is a bullish signal, because it suggests it tried to break down but it couldn't, so it bounced back up again. So that does suggest we're going to carry on going. Enough for us to make a decision to go low, to go short. I think we'd have to break through this trend line, solid break through this trend line on a daily chart. Okay, it's not to say there aren't opportunities on the 4-hour chart, etc. If you're being able to look at a chart during the day and be able to trade during the day. I mean, on that 4-hour chart, you've got a Japanese shooting star type arrangement here. After a very bullish bar, you've now got a Japanese shooting star formation that's actually quite bearish. So if tomorrow we start going lower, then that's an opportunity to go down, and we could go down to the trend line and then bounce back off again. So before we go up, it's possible we could go down. So watch carefully what happens, pick your timing and entry point. Okay, if on the daily chart you decide to go long and you want to wait until we break above that previous high from back over here, okay, then you can fine tune it by going to the 4-hour chart, etc. If you're going to go short, well, at the moment, if we do start going down, then what you could do is go down to the 4-hour chart and decide, well, if I go below the low of the 4-hour bar, last 4-hour bar on Friday, then we could go short with my stop just above the shooting star and with this support area, pivot area. That's a perfect stop. So for example, if we go below 14216, let's add another 10 pips, say 1.4215. If we go below that, go short, put your stop up here, 1.2473. Then it's only like a 20-25 pip stop, but you've got all of this down here to take into account. This could be a target somewhere down here on the trend line. Okay, so that's a good potential reward, but potential risk scenario. Okay, so that's for tomorrow. To summarize, if I look back on the daily chart, if we break above that recent high, it's really up to you. We haven't quite hit. If we're powering upwards, and just go long anyway and put the short. If we're going to continue, if we break the high of the Friday, then go long. If you want to be a bit more cautious, wait until we break the high from our previous high from a few months back, from November, okay, and then go long, and with a 50 to 100 pip stop loss, just to be sure, to give it time to breathe. If that doesn't happen, if it starts reversing, then you can either, if you're cautious, you can wait to the end of Monday to see if we've got a negative Japanese candlestick type scenario here, or you can go to the 4-hour chart, and as soon as it goes below there, you could go short and put your stop loss just above here. Okay, it's a good short-term opportunity. That's it for today. Don't start trading really until the UK Europe opens. That's what I would advise, because that's generally when you get the biggest moves, and also when the US opens later in the day as well. So thanks very much for watching. If you want to know more about how I trade, then please go to the website www.firststepsinforex.com, and there you can register and you can receive a free ebook, a 150-page ebook, and 6 videos that'll allow you to get started on trading Forex. Thank you very much for your help, for watching, and your support, and hopefully I'll post again in a few days. Thank you. Bye bye.